Morning, folks. I had a pretty cool idea for today's live stream. Somebody's messaged me. Probably someone saying the stream isn't live. Well, it's live now. Here we are, folks. We're doing it. It has been a long week. I've been desperately trying to return the market, or rather my internet, to a state of balance. Let me check if you can see me. You can see me. Beautiful. So, with no further ado, let's actually dive into what I want to talk about today, okay? I have kind of a cool idea here. We're going to compare three markets. Okay. So, I had a pretty cool idea. What if we took the time to weigh the pros and cons of markets you can trade in? Okay? Now, for some reason, people think it's okay to use the same technical analysis on any chart wherever they want, no matter what the market cap or the time frame or the nature of what they're trading. And sure, but we should go over what makes some things work better than others, at least across the board, with what we should expect here. Okay? So, first up, let's talk about eeny, meeny, miny, mo. Let's start with stocks. We're going to talk about stocks. Okay? Oops. I have to click on the frame first. Huh. Beautiful. Okay, what's nice about stocks? Why would you want to trade stocks? What does stocks have to offer that Forex and crypto doesn't? Okay. Stocks have significant fundamentals, and that results in significantly trending markets. Okay, you have earnings and dividends reports. You have very clear market structures. You can use long-term Wyckoff analysis. I would argue that the only place you can use Wyckoff is in stocks. Okay, right? Because here you actually have periods of accumulation and distribution that are easily definable and really result in significant periods of consolidation and trend, and that's great, right? This is one of the only places where retail investors can actually do well. All right, that's what I'm going to argue. Stocks are one of the few places in the world where retail investors can go in with the cookie cutter tools they've been handed and actually do well. Why? Well, because this is clearly consolidation, and when it breaks out of the range, it's clearly trend, right? For this duration here, we got a clear defined trend. And then what does it break down into? Well, it breaks down into a flag. This is quite clearly consolidation. And what happens when it breaks out? Quite clearly results in, you guessed it, trend. You have very clear and easy definable periods of consolidation and trend in stock markets. Okay? It's beautiful, right? Manipulation is literally illegal here. Okay? You don't get to complain about manipulation here, because anyone who manipulates typically goes to jail, or at least pays some hefty fines, right? Nobody wants to wash trade. Nobody wants to manipulate. Markets just stay normal, typical, and, well, they operate the way you would expect them to, right? There are very few surprises when it comes to stocks, all right? Let's talk about cons. Volatility is pretty low, okay? You make money off of volatility. If you see 5% returns in a year from stocks, that means you're doing well, right? You aren't going to make it rich trading stocks. It is, however, the most consistently profitable way to invest money, right? If you want to make money in the long term, invest in the stock market, right? People think, say, annuities are particularly safe, right? Like, oh, well, I'll never have a drawdown. I'll give you an interesting fact. If you bought into stocks right here at the very top before the this is the daily chart. I want the weekly. Excuse me. Yeah, there we go. Well, the crash patterns look just about the same. So what does that say about the market? Okay. jokes about the impending world depression aside, if you invested in 2008, right here, okay? If you bought all in right there for stocks, okay? And you waited 5 years and you just held, okay? 5 years later, all right, from 2008 to 2013, all the way over here, you would have outperformed annuities. I cannot stress this enough. Annuities are pretty much just betting, or well, it's not technically an insurance company, but they're just betting you're going to die before you finally get all your dividends back, right? That's what an annuity is. Annuities are terrible. Never invest in an annuity. You can blindly invest in the Dow Jones Industrial Average, and you could have invested at the peak high before the largest recession in decades, and you would have outperformed annuities after 5 years, right? Stock markets, it's very hard to lose money if you don't use leverage and you just sit and hold. It's safe. You should probably be trading stocks. I'm going to be completely honest with you, okay? Biggest downside, you're not going to make it big, okay? There's really no significant micro way to 10x your portfolio in a year, okay? There are tried and true ways to be long-term profitable in the stock market. Just look up the Turtle Trading Strategy. It's a freely available PDF that shows you how to turn $1,000 into $1 million in 30 years, okay? William Eckhart wrote this, or at least William Eckhart had some part in developing the Turtle Trading Strategy. If you don't care how long it will take you to become a millionaire, trade the Turtle Trading Strategy, okay? It's going to be very difficult for you to lose money using it. It's consistent, straightforward. That's what stocks are. Okay, next up. Currency markets. Let's talk about that. So, currency markets are typically heavily ranging markets, and you are not going to find significant trends here. And this is, you're probably going to lose money trading currency unless you have some wildly successful information on probability distributions or something similar, right? You will not make money in trading currency if you use breakout patterns, if you use static trend lines, if you use support and resistance, if you use any kind of lagging indicator at all. If you use a lagging indicator, you're screwed in the stock market, okay? Not stock market, I'm sorry, currency market, right? Significant trends are hard to come by, and true periods of the alignment of expectations are rare, okay? If you want to scalp all day, well, I have good news for you. For every action, there's an equal and opposite reaction, okay? And in a market with everything driven by fundamental news, well, this can have some very beneficial side effects, right? Let me just point out an example. Like if you're down here on the 15-minute chart, you can trade counter moves with great success. It's just, here's the problem, guys. Everybody loves trying to trade the news. Everybody wants to trade the news. Everybody likes to trade the news. Oh, President Trump just made a stupid tweet. The U.S. economy is going to crash, right? Everybody likes to trade that. Time to short the USD. Okay? And that's this right here, that's fundamental news. That's something fundamental happening, and then there's a bunch of people selling the news. And then, well, what happens after that? There's a reactionary little brief period of upward movement before trend resumes to the downside. Well, guess what, guys? Counter trading the news is far more effective than trading the news. I'm just going to say that right now, flat out. It's always going to be true. Unless you have periods of true compression, but that's for another video, right? So let me just point this out to you. Longest over expanded period in this instance is 450, 500, yeah, 500. So if we change this to a 500 period, and I have not back tested this information, it might fail, I have no idea. 500, okay? Wow, look at that. So, 500 period defines trend, you know, that's a little crazy. Look how high price volatility is at that pivot. Because this is the pivot where trend either continues or reverts to the 500 moving average. And guess what happens, guys? This is insane. Wow. I need to go back to trading Forex. So, look at this. We test once, twice, 3 times. Further rejection. Lateral consolidation. We have another retest. Another retest. Another retest. Another retest. We break inside. Test the bottom. And then guess what we revert to? This is the counter move. This right here. Alright? That implies that price needs to trend exactly to the 500 moving average. And lo and behold, it happens. Right? Force and mass, my folks. So, downsides of trading currency markets. Macro level mean reversion positions will fail due to the nature of fundamental news. And I don't have an example of this because it's actually kind of a rare occurrence. If you have a generation of mass like this, and then you start getting the consolidation, and then expectations once again align for decay through fundamental news, your trade will fail, right? Math will fail to fundamentals. Math is more consistently profitable than fundamentals, but it's important to know that one trumps the other, right? Okay. Beautiful. And another pro of trading currency markets is the insane liquidity. You're always going to be able to fill a position, right? And especially true on macro level time frames, where even institutional investors take the time to iceberg their positions for longer term alignment of expectations, right? Downside, it's very rare you're going to make money if you don't know what you're doing, because, well, Forex markets is or are, I'm not sure. Institutional investors are engaged in thermonuclear war, and you're sitting on the battlefield with your little knife, excited that you're on a kill streak, right? Completely oblivious to the true war happening around you. Okay, guys, this is not your fight. Forex is not your fight. You have very little place here actually attempting to trade Forex markets. And the only way to beat institutional investors at their game is to adapt a strategy that counts on the fact that due to the liquidity restraints of institutional investors, that they will not be able to mess with what you're doing. And I suppose that was long-winded, so let me try again. The only way to make money in Forex, or the only consistent way, in my findings, is to use a strategy that institutional investors cannot adopt because they are required to manage so much money, right? And that's exactly counter trading news, right? Because those periods of consolidation, well, if an institutional investor took that period of consolidation and if we got that mean reversion condition that, say, we saw down here on the 15-minute chart, right? This right here, if an institutional investor tries to trade that, well, he's just going to cause a single wick to the upside. He doesn't have the time to deal with this. He doesn't have the liquidity requirements to deal with this. He has too much money to trade consolidation. He only cares about trend, right? So if you're a retail investor and you counter trade the spikes of mass that an institutional investor generates, well, you're in luck, right? Well, let's do another scenario. Let's say that this is a part of an institutional iceberg, right? He has long-term bearish expectations, so he's consistently opening short positions every X hours for a set period of time, right? So he doesn't care about short-term volatility. All he cares about is selling his position over a long period of time, hoping that you, an idiot retail investor, is going to fill his bags. Okay? So every time he does drive the market down like this, there's going to be a period of consolidation, which we have identified here, right? He doesn't have the time to trade this highly profitable and expected event because it's a generated move from the result of his longer term position entries. Okay? That's the benefit of Forex. Okay, let's talk about crypto. So, pros and cons of crypto. Gee, it's kind of funny. I'm just going to type this out so you guys have an understanding here. The market is manipulated. It's going to stay manipulated. That's not going to change. Nobody's going to regulate crypto. It's a monster that cannot be tamed. Many people consider this a con. Oh, there's so much wash trading. People are manipulating price. There's people are painting bull flags to fool me. Okay? That's a con in their opinion. Here's the thing, guys. If that's truly a con in your opinion, you shouldn't be here. You should not be trading crypto. You know where this can happen? You know where manipulation can happen? I'll give you a hint. Over here on the AMD chart. Alright, because if you're over here on the AMD chart, well, nobody's going to manipulate that. They can't. They'll go to jail. Okay? If you don't want to deal with manipulated market, go trade securities. Go trade stocks. It's going to be easier for you. You're going to make more money because you aren't taking the time to learn how to trade a manipulated market. In crypto, manipulation is key. Manipulation results in volatility. The only reason you should be trading crypto is for the volatility. You should not be here for the tech. One of the downsides of the crypto market is the hysteria of it all. People are excited by blinding new tech. Guys, I want to be honest, I don't know half the shit coins I trade. I can trade a ticker without even knowing its name, and I'll be very profitable doing so. I'm not kidding. Guys, there's no reason for you to care about any project, any of its fundamentals. All right, it's just a gap. Oh, you care about the fundamentals of crypto? Okay, show me the earnings and dividends reports, please. Jesus. If you can't show me earnings and dividend reports or any kind of proof that the company creating the coin is going to be successful other than the price of the coin and the market cap, well, weren't you just crying that it's manipulated like 5 minutes ago? The only reason you should be trading crypto is because it is so heavily manipulated, because the fundamentals don't matter, and because it is so ridiculously, stupidly volatile. It's the only reason you should be here. I do not believe in the tech of crypto. I don't believe it's worth anything. I might be wrong, that's good. I profit from me being wrong. But always assume the worst case scenario in trading. A plan B is more important than a good plan A. I cannot stress that enough, and you need to put that on a post-it note on your desktop. Okay? Here's the thing, guys. Here's another pro of the crypto market. Ignition momentum. The crypto market is over-leveraged. There are too many people with too much leverage, and they result in, you guessed it, stop losses. We get stop losses. We get stop losses. Okay? We have a nice little tight range here. Everybody's over-leveraged. They'll say, oh, well, I'm short here. I'm going to put my stop loss right there. Right above the local high of the range. Well, guess what happens when that person's stop loss hits? Well, somebody has their stop loss here. And somebody has their stop loss here. Somebody has their stop loss here. Stop losses trigger stop losses, and they result in something called ignition momentum, where because everyone is so over-leveraged, they need to use very tight stop losses, otherwise their risk management is shit, right? And when that happens, well, we get these kind of moves. And you know what the pro of all this is? This is the biggest reason why I trade crypto. Is because of the clear, consistent mass generation. Same thing with trading fundamental news in Forex markets. Because, you're going to love this, guys. When you have such a clear, defined move like this, the generated distributional width is going to be very, 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 very easy to read. Look at this. This plume is so clean compared to any Forex or stock chart. Right? It's exactly the 50 period. So guess what happens? When the 50 band is re-entered, price reverts exactly to the 50 mean. Manipulated markets result in very predictable periods of consolidation. That's why I trade crypto. I don't care about the range itself. I care about the resulting range from manipulated moves, guys. That's it. Because that consolidation is going to be the most consistent thing in crypto. Alright folks, this has been an absolute pleasure. If you want to learn more about my strategy, what I do here, go ahead and click the links in the description of this video. I'd be happy to teach you more about all this. It has been a pleasure. Very nice idea, guys. Well done. So, let's open up another chart. I need to check the comments, see if anyone's actually watching this. 15 viewers. Nice, guys. Whew, yeah, I really am going to need to show that video. That was inspired. If I do toot my own horn. Okay, comments time. A Cat with Chart says, out of scope, but worth saying that you can in a lot of countries and probably should be getting whatever your country's tax benefits for investment retirement accounts with equities. Oh my god, yes. Benefits of stocks, well, the tax benefits are much better than anything else you could trade. There are advantages and incentives to being a long-term investor, but that's something different than trading per se. Absolutely. I would say investing is going to be most successful in stock markets. Rich says, can you do a demo of the compression moving average indicator for those interested in getting it? Ooh, okay. I am not well versed in this indicator yet. A cat's been trying to get me to use it for quite some time. Really, my number one what is a rune? That looks cool. Never mind. I don't know why I did that. Okay, invite only scripts. We want to use compression MA 600 max. Okay, the theory behind this is price has a difficult time moving outside a compressing range, right? And I just want to find a generic chart. Let's do something with decent volume. Fine, BTC. BTC on the 4 hour. And this is going to take a while to load, just give it a second. And it actually has something to do with volatility overhead. This is kind of a cool thing I've noticed. Let's just full screen this for a second while we wait for it to load. So whenever you get generated mass, you'll notice something pretty cool. You know, when a light turns on or when a period lights up on 3D Wave PM, that means it's in a state of expansion. And you can actually notice something pretty cool here. I love this. This is one of my favorite things about 3D Wave PM. So, do you notice this compressing period here? Or rather, how this plume of mass just tapers off like so? Okay, what's something interesting you could notice about anything below the line and anything above the line? Right? When the period lights up, that means it's in a state of expansion. Anything above the line is not lighting up. And most things below the line are lighting up. So, that means we can get expansion all down here, but we won't get expansion all up here. So, we will not get expansion on the longer overexpanded periods, which means you can accurately define a range with it. At least that's the theory. And it actually works pretty well. I'm not actually sure how this is calculated. I just know that that's the basic idea behind it. Pretty much, this is just a secondary confirmations indicator, where if you're trading at the top edge or you're trading at the bottom edge, it implies that it's going to be very difficult for price to break out of the range, right? Why might that be? Well, because you can't, rather it's very difficult or it would require an unrealistic amount of force to cause expansion on a period that's compressing from a place of extreme mass. Okay? That's the idea behind it. Nice try though, guys. So if you want to use this for range trading, it'd be very effective doing so. Okay. Yeah, I strongly recommend people watch a Cat with Charts video explaining how to use the indicator. He wrote it. He can probably get into the technicalities better than I can. John Rasmus says, when purchasing your indicators, is the code available for customization? It is not. It is locked. Yeah, guys, when you get these fuzzy lines, actually, if you want to run a range trade on the fuzzy lines, you can do pretty well for yourself. Short at the top, long at the bottom. It worked pretty well. Okay, folks, this was fun. I'm actually not going to do any charts today. I just wanted to get back into the groove and talk about strategy. It has been a pleasure. I will talk to you all you folks sometime in the near future. Tomorrow, same time, 1 p.m. MST. Make sure you like and subscribe. It does do me quite the favor. Alrighty, folks, with no further ado, Dad Shark out. Have a good one. Ah, my hotkey didn't work. Goodbye.